Hello and welcome to Thetafin and this Thetafin live stream. I mean, it's the second within the last 6 hours, and it is the third in the last 24 hours. I'm just really trying to pick up pace. In this video, I just want to welcome you in this stream. I want to welcome you to the channel, first and foremost. Welcome you to Thetafin. We give an insight into financial and investment excellence. What does that mean? We are here to educate, guide, provide tips, free advice in terms of this channel. Obviously, I want to be completely transparent. We are setting up a platform, an e-learning platform, very bespoke, first of its kind, incorporating various things that I have to keep my mouth closed about. But within the next few weeks, to about 4 weeks time, all will be unveiled in terms of what we've been working on in the background. And yeah, I just wanted to introduce myself on this Wednesday morning. And in today's video, it's more of a recap. It's a redo in terms of the first video of the channel where the audio wasn't all that great. And I wanted to go over some of the points that we touched on, set some guidelines in terms of this being the introduction to this system, to this philosophy, to these core market principles that we are looking to teach here on the Thetafin YouTube channel. And it will prove and kind of act as a reference point to, I guess, investors, anyone who sees themselves looking and, digesting investment content on the internet, on YouTube, on Twitch, on the various open platforms out there that make and provide YouTube content or video content to educate traders like you and I, traders and investors, people looking to gain financial freedom within these financial markets, trade in assets, whether it be gold, crypto, shares, stocks, commodities, indices, precious metals, whatever it is, even Forex, that keyword, that scammy word. But, I don't want to make this a Forex focused channel. I want to touch on all the other various assets that can be invested in and go over key principles. So in today's stream, or in this afternoon stream even, because I'm looking to do three streams today. As I said, this is the second of three. It's a redo of the first video that I put out there. I'm going to spend about an hour and a half or so just going through some philosophies, laying the foundations in terms of this trading system, and hopefully giving you guys some insight. So today I want to touch on identifying trends, setting out and outlining the core principles and philosophy behind the trading principles that we at Thetafin will be teaching and implementing and showing you in real life, live market conditions. So there aren't any, there isn't any confusion. I won't be doing what 80, 90, almost 100% of content creators out there within this space do. There's no cherry picking on this channel and setting up and kind of looking at ideal market conditions to showcase what, principles or system or trading strategy that we're trying to kind of, I guess, sell or put out there to the masses to digest. There is no use of big words and technical financial jargon, investment jargon, liquidity, resistance, all of those keywords that you hear thrown around loosely, but the implementation and the showcasing of them differs between all of the different content creators. There will be none of that on this channel. And yeah, it will be a hub for free guidance and education in terms of our YouTube. And then if you want to explore more, if you are interested in what's being shown, you see in the effects of it, you've tried some of the free advice and it's helped you, there will be courses available in the next few weeks, as I said, while we're building our platform. And it's under development, where you will be able to pick up some guidance and be able to level up in terms of using and implementing some of these strategies, getting access to indicators, and many more things. So, without further ado, I am, soon revealing the markets. I'm just setting up some screens in the background, just setting up my MetaTrader, and then also I want to, I guess, experiment with something today, going through and switching between MetaTrader and TradingView, just so that I can show you the best of both worlds, because I know that not everybody in the crypto space, or essentially the crypto space, has access to MetaTrader. I know that a lot of brokers do not offer that. It's more of a tool that's akin to forex trading, stocks, and that kind of thing. So, if you are familiar, the concepts will be the same. And like I said, where need be, I will flick between the two systems and show you the best of both worlds. So you can, make a start, just from this video alone. If you're an experienced trader, no problem. You'll still be able to learn a thing or two, because I will be touching on those things, as I mentioned: support and resistance, liquidity, zones, trend lines, and all of that good stuff, and showing you my thoughts on them. So without further ado, let me open up my charts here, and let's get started. So the first thing that I want to go over with you is, just bear with me a second, just organize myself and make sure that I've got the right things on the right screen right now. So yeah, the first thing that I want to go over is this video, or this stream's title, being able to identify and, spot the big market trends before anyone else, because it will help you get in at the right time, get into these big, profitable trades, regardless the market. As I'm probably gonna focus a lot on the crypto space this week, just because there's a lot going on. There's a lot of um, I guess, yeah, there's a lot of movement, there's a lot of speculation, and I think this material, or the principles that I'm going to touch on today, will appeal a lot to the crypto bros and sisters. Yeah, we don't discriminate. All are welcome here. But yeah, it will really resonate with a lot of people that do trade crypto, uh, implement an investment in terms of, maybe 20% of their salary, whatever it is, whatever financial management principles you're following. I'm hoping, and really hoping, that this system that I'm about to show you today will help you in terms of your trading, to make better financial decisions, better investment decisions, and kind of, it's not to speak negatively on any kind of material that's out there. I believe that every system, or any system, can be profitable and successful. The main causes to things going wrong, or a system or strategy failing, 9 times out of 10 is just poor risk management, poor financial discipline, poor psychological discipline, and poor trading psychology. Those are the only things that you can really attest to things going wrong within your trading and investment portfolio. And hence why I think it's a great point to introduce the system on that particular note right there. What exactly is it that Thetafin bases its principles on, in this system that I'm looking to teach, or we're looking to teach, implement, educate you on? And, in terms of the grand scheme of things, give you something, or principles, in terms of our free content, to give you principles and things to think about, to take away and implement into your own trading strategy. Maybe look at a new way of doing things, maybe add or take one or two things and implement it into your system, because there is no holy grail of, trading system that is 100% accurate. I have to put that out there from the beginning, from the get-go. I think, not so much, not even an I think thing, it's fact. All of this is based off of probabilities. There is no finite way of determining and knowing that, where exactly price is going to end up tomorrow, because that's all we're doing. We're all in a rat race trying to predict which way price is going to go and hoping that we are right in our speculation, and then hedging and investing in our speculation, right? Now, with that said, if you think about, the gravity of what that actually means, is if we're all guessing, this just becomes a numbers game, right? It's a numbers game. And I like to play numbers against numbers because, men lie, women lie, numbers don't lie, right? There's no speculation when it comes to things like averages. There's no better approach to take in terms of probability than using the numbers in front of you. And that's the core foundation. It's the core of this trading system, being able to review and look at the numbers in terms of price, where it's been, what it's been behaving like, and using that to then gauge, okay, how likely is it to move, in a certain direction based off of the current movements, taking a top-down approach. I'm a really firm believer in terms of top-down analysis. And again, top-down analysis from a point of view of numbers and averages. So what is this system? What is it built on? I don't want to waffle too much. I want to try and condense this video into 3 short bullet points, spending about half an hour on each one, and then closing up. And then from there, you can use this stream as a hub, as a core, as a starting point, so that anything else I ever mention in terms of, if I touch on a few things here and there, you can always revert back and go back to this video or this stream as a source of truth, as a starting point, as a pivot point in terms of whatever we dive across. You can always come back here and kind of pick up the basics, because I can go into detail, but I don't want to overwhelm anybody. I don't want to, have this as a video that's just tailored to people that are, intermediate or experts in terms of they know all of the terminology and know all of the principles. It should be inclusive. So excuse me if I am beating the, trying to, go over things in a pace that seems like I'm spoon feeding or babying people along. There will be viewers out there that are consuming this for the first time. They've heard about cryptocurrencies. They hear all their friends talking about cryptocurrencies. They may even have profiles and portfolios on some of the biggest exchanges, Binance, Kraken, Coinbase, and the others, crypto.com. And they're making financial decisions, investment decisions based off of speculation. And a lot of people do fit into that category, right? And again, I am focusing on crypto, but these principles will be applicable to stocks, precious metals, commodities of all kinds, indices, whole markets, Wall Street. You can trade a whole of Wall Street off of these principles. Foreign exchange pairs. You can use exactly the same philosophies and approaches. And guys, without further ado, let me stop waffling on. I've been talking for a good 15 minutes already. So let's cut to the chase. This principles and this system is built upon an algorithmic approach, right? What's an algorithm? An algorithm is a set of steps that are dependent on the previous set of rules being met. And again, we do that because we don't want to take the numbers and remove them from our decision making, right? So I'm just going to remove a few things from my chart now, so that it's bare bone. Let me just close that. So it's just a naked chart, which you can see there. And then if I just flick to my trading view, I'll do the same. So you can see that this trading view is again also a naked chart. Let me just remove this. So yeah, just a generic empty trading view chart. It's currently showing the SP 500. index, but I will change that to crypto and place BTC USD on there just so that it matches up with the chart that I'm looking at on my MetaTrader. So again, so you can see I'm on daily. Yes, I'm on the daily time frame, and that is priced at 26,133.07, and it is exactly the same. My MetaTrader here, it's 26,118, so it's slightly higher. Different fees for different brokers and things like that. I'm currently logged into my Pepperstone Pro account on this MetaTrader. Again, the Pro is signified by these P's against my symbols, a P for Pro. And yeah, just a bit about me before I get going. I am the founder of Thetafin. I am an FCA, Financial Conduct Authority for those in the UK. I'm an FCA accredited professional trader. Got my accreditation in 2021 via my broker Pepperstone. So you can go away and do your own research in terms of the criteria you have to meet in order to be recognized as a professional client, and then that affords me the I guess the what's the word, how to articulate this. It affords me the opportunity to be able to trade all of these different symbols and assets, right? So I think you can't trade crypto on their standard account, but again, there are different platforms out there online that allow you to do so. There is no bias here that this stream or this account or this business isn't sponsored by uh, Pepperstone in any way. There are affiliate links. Again, I'll be transparent. There is an affiliate account in the back end, but there are no links being shared in this particular stream. So please note that we've got no sponsorship or anything like that from Pepperstone. Again, this is just who I trade with. This is who my professional accreditation is with. They are a reputable trading company or brokerage in the UK. I've been with many others, BD Swiss and to name a few, who are no longer regulated by the FCA. So my money wasn't safe with them. And again, won't dive into that too much. I've been trading for a few years now, and again, developed this system just off of just education, I guess, trialing out a few courses. So I've done things on support and resistance, supply and demand, candlestick pattern, you name it, I've tried it. And this is all the systems that I will be talking about and kind of displaying are the ones that I guess I found most success with. I think that's the fairest way for me to put it. So yeah, so enough rambling on. So this is a naked chart, and what we're looking for here in the first instance, again, just a quick, I'm going to speed up the pace a little bit now, just to show you the principles of our system. Again, I won't try and reinvent the wheel too much, or go through the bare bone basics. I'll assume that you guys will be able to identify market direction, whether it be visually, or again, once we get into it, you'll see other ways to do so. So again, what is market direction? So market direction is identifying, identifying the trend in the market. So again, the core concept in terms of this video is to show you a really, I guess, innovative way to look at market direction, top-down analysis, and building the fundamentals and the core, I guess, word to use again, principles. That's the one. Principles in terms of our trading system. So market direction. So market direction is being able to look at a set of charts and identify the flow, the trend, the direction of the trend, right? We can do this visually, just again, looking at the direction of price, being able to identify lower lows. So what are lows? Lows are the low points in terms of the movement of the market. So if a market's moving in, the usual up and down cascading manner, a low trend or a bearish trend would be lower lows being set So in this particular instance on the daily for BTC USD, it's let me do this on trading view just because it's a bit easier to draw the chart and kind of annotate what I'm talking about. So just bear with me. Yeah. So being able to identify lower lows, I thought this would be nice and straightforward. However, it's proven, yeah. So that's it. Thank you for that. So being able to identify lower lows being created within market direction that forms a downward trend, and then in the opposite market conditions, being able to come on, being able to ident. Excuse me. I've got this really awful cough. Pardon me. So in the opposite market conditions, being able to identify. So sorry about that. Just kind of disgruntled me a little bit there. Threw me off my trail. So lower lows. So yeah, being able to identify lower lows being created as well as lower high points. So a high point would be there. So lower peaks each time, which signifies that the market is moving in a bearish manner. It's going in this direction, in that manner. Yeah. And then the opposite would be true in a bullish market, which would be in an uptrend. So again, it's being able to identify. Let me do it on hourly. It's just easier to draw this out for you. Just again, I don't want to reinvent the wheel or spoon feed you guys too much. It's just about just explaining the terminology so that we can get off it as soon as possible. So being able to identify market conditions where higher highs are being created, as well as higher lows, right? Again, that's a simplified bullish run. Yeah. So first things off the bat, so lower lows, downtrend, and this is generally how the market moves, right? It moves in this manner, creating higher lows, higher highs, lower lows, and you identify the direction or the movements within the market, right? So with that said, oh, that would have been a better tool to use. Come on, come on. Yeah. So yeah, with that being said, let me stop making a mess on this chart. Let me clear that up for you and return back to my MetaTrader. So with that said, this principle relies on being able to identify those trends and identify them early, right? Being able to get in terms of when the market is in its trending state, right? So in these big pushes or these big drops, because we can use both sets of conditions in terms of different strategies and different approaches depending on what you're trading. So if you're implementing you're investing in crypto at the end of each month, for example's sake, you want to be able to do that with the coins that are trending in more of a bullish manner and in an uptrend, right? That is again an insight to investment excellence, right? That's when you want to be putting down your 20% at the end of each month and putting it into some altcoins and hoping to get a 10, 15, 20, whatever it is, however bullish the market is, depending on other core principles that I will touch on, like volume, and being able to reap the rewards of that. Because again, it's no good, let's say, for example, again, just giving you a loose example before I move on, being in that same scenario that we've just talked about, where you've you've got some cash at the end of the month, you've just been paid, all of your bills have been paid, and then you invest, or you see that Bitcoin is at 31,000, and you think, cool, it was at 60K at one point, 60K USD at some point. It's been on a bearish run. I think this is the floor because a lot of people are talking about it. My taxi driver has just said that this is the end of the bull run, and then you end up investing or putting your money into Bitcoin, and it goes down from 30K to 20,000 USD, and you're wondering what happened, right? Right. So it's about avoiding these situations, but being able to get in if it's the other way around, being able to get in and buy Bitcoin at 19 at the point of which it rises back up to the 30s. So being able to get in somewhere here, right? And this is what I'm looking to aim to showcase in terms of how we identify these core, these big trends, while avoiding these trending markets. Because again, everything that I'm saying in this live stream, we will be able to back it up in terms of real life market conditions, so that you take all of the speculations, because trend line and candle patterns don't help you here. They don't help you in market conditions like this. But the system and the principles I'm about to show you over the next hour or so will help you to avoid, and you'll be able to see it instantly, how to avoid these market conditions where it's trending, and be able to get in on the bearish runs. Or for example, if let's as I said, I'm talking about crypto right now, but if I was to put let me put something tradable on here, right? So if you are investing into the US 30, where is Wall Street? Where are you? Sorry guys, let me just place this the symbol for Wall Street onto our list of indices. Um, yes, US 30. Come on. Where are you? It's saying it's on my list, but I don't know if it's the rays of oh, here we go. Here it is. Right. So again, it's just about being able to identify and see if we're about to place our, you know, buy some shares or invest into the US stock market, being able to identify where the bull runs are. Again, not bull runs, again where the volume is in the market, and being able to get in at the core points where the trend is most likely to take place. The trend is most likely to be in your favor, so that you can benefit from that pump in terms of the investment, in terms of the value, and then being able to identify where to avoid certain markets, where to avoid certain shares, and so on and so forth. So I can put anything, Apple, whether it's Apple stocks, whether it's Google stocks, and knowing when to get in and when to get out. And these are the core principles that I'm trying to teach here on this channel, right? So leaving speculation out of it and being able to just tune in and focus predominantly on the numbers, right? Leaving speculation and emotion away from the table. We don't want to be making money moves based off of desperation. We don't want to be placing trades and over hedging our risk because our rent is due. That is not trading, that's gambling. And that is what I'm trying to eliminate by showing you this system, which is numbers driven. As I said earlier, men lie, women lie, numbers don't lie, right? So that is what the core principles on this trading system are built upon. And let me just get straight into it and show you exactly what I mean by that. So let me put BTC USD back on here and just show you a few things. Again, just keeping it relevant, keeping it current, because what I won't do, and you can hold me accountable to this on this channel, is show you cherry-picked market conditions where everything aligns up in terms of what I'm trying to showcase to you. I want to be able to show you, look, right now, this is how we implement the decision making right now, because it's no use me showing you what I would have done with hindsight and how I would have been able to get into a trade and get out in the right, get out at the right time and just make it perfect. No, because trading is about probabilities and making an educated decision based off of the probability of you being correct. So even with my strategy being about 67 to 68% accurate, sometimes about 75% accurate, I can rely on that each and every time by taking my emotions out of it, by not drawing lines where, I'm now left to think, I've drawn this line because price did this and price did that, but I can't factor in the war in Ukraine, because the war on Ukraine doesn't care about what the candle pattern is. The big banks don't care about what the candle patterns are on these charts when it comes to moving their money from the euro to the Swiss franc, right, or to the Japanese yen. The Japanese, HSBC and the other Japanese banks could care less what where the areas of resistance are on your chart. They make their decisions based off of risk, based off of what's happening around them. So yeah, technical analysis it doesn't cross paths with fundamental analysis. You still have to be privy to both. They both have an impact in terms of the market, and you have to be able to make a decision in terms of market direction or the direction of price based off of the numbers, not your speculation, not because you drew a really cool set of trend lines and you got onto your trading view and placed the Fibonacci onto the charts, and did all of this kind of thing. It doesn't work that way. I'm sorry to break it down to you in this manner, but it doesn't work like this. This is not how money moves. It's not, because, trader X did this on his chart and, he's aiming to take a profit somewhere over here, and he's expecting price to do this and then, move this far down. And guys, if there's a war, the banks don't care about what you've drawn in your chart. And that's what we need to be in the mindset of. We can't be trying to make, financial decisions and speculate on the direction of price based off of what our chart showed us from 2 weeks ago. What price is doing now is based off of like the real life situations and the real life interest rates and things of that nature that are happening now. So you need to be able to trade in the same direction the big banks are trading, and hope that you can get in the same direction that they're going with their money. And that's based off of real life averages, not what you drew on your chart 2 weeks ago in the hopes that price will automatically get there, and ignore all of the things happening in the world. Ignore the war, ignore the fact that Putin has just met with the North Korean president. All of those things make money move. All of those things don't care for where you drew your Fibonacci and what points that you're aiming for on your chart, right? So again, I draw all of these things and I show you these principles and explain the philosophy behind it, just so that you can get an understanding in terms of why we're doing things, or why I'm showing you how to do things the way I'm showing on these charts. So let's start with the first indicator. Let's start with our first indicator that I want to put on here, and the first principle that I want to show you today. So again, I'm going to go through a top-down analysis and talk to you about the algorithm, the system, taking your emotions out of it and opening the doors to the riches and the rewards of this market when you play the game right, when you use the correct risk management, right? So without further ado, let's put the first indicator onto the charts. So what I'm doing here is just putting a moving average, but I want to floss a little bit. I want to show you my indicators. Bear with me. There's a plane, probably Putin's plane, flying over my house right now. Probably on his way back from North Korea or from Russia, wherever the meeting is. I don't know, but yeah, that was a bit of background noise. I don't know if it was picked up by the mic or not, but they have flown past the house. So let's get back to the video. So I'm just going to put this on the chart. and I'm not going to explain it. I'm just going to make it look good, and then head over to TradingView, where I will show you the equivalent that you can implement onto your TradingView chart, and then we will go through things that way. So just put that on. That's on, and then I'm heading over to TradingView. So here now, let's get rid of this nonsense because we don't need it, right? And the first thing I want to do is this. Oh, bear with me. So that's gone. And then what I want to do is add an indicator. So to add an indicator in TradingView, again, this is just a free chart. I don't use TradingView to do my market analysis, but again, this is to be inclusive, to show you guys that you can implement these strategies right away. You can go into your TradingView and follow along if you want to. So I've just opened up TradingView, gone into Bitcoin USD. So just to show you the Bitcoin USD chart. And then now I'm adding an indicator. To do that, you've got the indicator section up here. And all I'm looking for here is an MA, right? A simple moving average. But let me type it. So used to my shortcuts. So moving average, simple moving average, right? So the fourth one down, just use that, the generic one. Yeah. So I've put that in, and it's drawn something that looks similar to what was on my screen. Let me just change the color so it's just a bit more visible to yourselves. So make it yellow. Let's make it a bit bolder. And then the inputs, I'm just going to change it to 14. Yeah. So the length of time for this average is 14 even. Close. That's the main 5. Yeah, that's fine. Right. So why have I drawn this onto my chart, right? This is going to form the first step of my algo, right? The first step of my algorithm, which is, let me get off the hourly and go into the daily, right? So again, just showing you guys the philosophy, the principles that I'm following in terms of market analysis, market structure, and things of that nature. The first thing I want to do here is draw a moving average, right? This is going to form step 2, right? There is a step 1, but this is going to form step 2 in terms of our algorithm, the things that we're looking for, in terms of our market structure and our setup. So the moving average allows us to see various crosses along it, right? So we're looking at an algorithmic approach. Why is this? An algorithmic approach allows us to make, I guess, decisions without our emotions being involved, right? Following a set of steps and rules. So if I'm showing you and telling you the first step here is going to help us not only not to identify the market direction, because we can do that already visually, right? We can do it visually, and there will be other things that will help us identify the trend, but market direction or identifying, that should be very simple. It's very simple to identify, when you're in a downtrend and when you're in a trend. But what we're looking to do here, right, is pick up and recognize the start of those trends, right? The start of those trends. Now, I'm going to show you something. And again, these are not auto triggers, right? I don't want you to look at these look at these conditions or look at these steps and then think, hey, I've made it. Start throwing, money around, thinking that you're the next wolf of Wall Street, right? It's not that, right? So I don't want to see, all of, I don't want to, what I don't I don't want to see you guys being in a position where you're starting to splash the cash and enter trades just because of step 1. Don't get too excited. As I said, we're taking an algorithmic approach. meaning there are going to be a few sets of rules to follow, and each of them needs to be yes, yes, yes. If any of them are no, you do not make a move, right? You don't make a move. Now, in fact, you don't make a move, right? So now in terms of Bitcoin, in terms of crypto, right? I'm going to show you this principle in a slightly different way, and then I'm going to show you how this would then apply to something like Forex, how it would apply to something like gold, how it would apply and how you would use it for something like Forex and stocks and things of that nature. We're going to start off with Bitcoin, right? Biggest use case for this is we all hear our crypto bros talk about the fact that their screen is flashing red, right? The screen is flashing red. We're in a bearish market. That means that the bull run is coming soon. The bull run is coming soon. Well, when do you identify bull runs, right? When do you identify these areas of overboughtness? And I'm not talking about the RSI. That was a simple indicator that I used to showcase and kind of help me in terms of showing people volume and liquidity, right? But that's a step 2 thing, right? And people used to get so excited when they used to see that and use it on its own. Yes, you can find some success in using it on its own. However, you know, it's about using these principles and using these tools in a way that you do not, let me just get this, annoying my eyes, right? So using these tools in a way that you're not alienating or ignoring the fact that we still have to have a risk averse approach to our trading system, or having a sound set of principles in place to have appropriate and sound money management in place. Yeah. So this is the first step in terms of just identifying the trend, right? You don't pull the trigger just yet. You wait, right? You wait. So we've placed this moving average, right, onto this chart. And again, I'll show you my flashy one and explain what it does, because it does a little bit more than the one I'm showing you. But we'll get to that. With time, yours will grow to where mine is, right? But for now, enjoy the freebie, enjoy the free tip, because as I said, I'm giving you free game that you can implement in the markets today, now, right? In real life conditions. Okay, so let's get back to our trading view and continue this, because I've spent a lot of time in MetaTrader, and people might get a bit put off. But yeah, let's do it on a tool that you guys can also access, so that you guys can also check in and put some of these things on your charts yourself, and see it working in real time yourselves as well, right? Because as I said to you, we can all sit here and draw charts and draw trend lines, but it's not what this channel is about. It's not this trading system and the principles I'm trying to instill in you guys are about, right? So yeah, moving on. So we've drawn this on, and the first thing we want to look for, right, are crosses along this the trend line, right, in either direction. But for the sake of crypto, and I'll repeat it, for the sake of crypto, for those who cannot trade it in either direction, in terms of if your portfolio just relies on buying when supply is there, selling when supply is over, when the supply is there, and buying when the demand is there, right? That you'll be able to use this principle in this manner, right? This section is where you guys need to really pay special attention. What we need to look out for is crosses on and along this yellow moving average that I've placed on here. And as I said, it's a simple moving average set to 14 in terms of the length and SMA of 5, right? Just generic. All I've changed is the top value. Again, you can go into your trading view, open it up. I'm not hiding anything. The length is 14. The method is SMA, and the length is 5, right? Just leave that. And I'm on the daily time frame. Yeah, US BTC USD. Right. Principles are we're looking for crosses along this line, right? So whether a candle is crossed from above to below it, right? Signaling a long, or, sorry, a short, pardon me, signaling a short, or a candle, like in this manner, crossing from below to above it, signaling a long, right? That's all we're looking for. And I said to you guys, I'm not going to cherry pick, right? So in terms of like this current, in terms of today's market, we're seeing that it's in a place where it's just crossed and gone above, right? It's crossed and gone above, right? But this candle has yet to close. So we're looking at a set of market conditions where Bitcoin over USD has just opened and crossed over. It hasn't closed yet because that's not going to close until 9:45 tonight. But that's what we're looking for. These are the signals that we're paying attention to. So every single time this happens, it's not a trigger, as I said, because it's algorithmic. It's an algorithmic approach. It's a step one of many. So what I want to do now is just highlight these crosses. Gosh, don't know what I'm drawing there, so please pardon me. I'll just highlight. Right. So we're looking at these crosses, and I'm going to highlight all of the ones to go long in yellow. Right. So these are the crosses that I'm talking about. Okay. And again, as I said to you, I'm not going to cherry pick. I'm literally highlighting each and every single cross just so I can show you something. Right. So those are the ones, the yellow dots are where we've identified signals for entry for long trends. And now I'm going to highlight it in, what color should I use? White. For longs, sorry, for shorts. So again, here, across, a cross, a cross, across, a cross here, cross here, cross here, cross here, 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 and so on and so forth. You can go as backwards as you want, but this is essentially what we're looking for, yeah? So the yellow crosses, where the candle has opened from below, the green candle, the bullish candle has opened below the moving average, the yellow moving average line, and closed above it to signal across, right? So then of these movements, because you can see now, like visually, we're building the blocks, right? I'm getting into this in the detail that I haven't done in the other videos that kind of precede this one, and the other streams that precede this one, right? So if we're looking at this in terms of, just bear with me. If we're looking at this in terms of signals, just strictly signals, we'd have a few there. There's a few different ones. I'm not going to count it out because it's not really the grand scheme of a point I'm trying to make. But if we look at strictly, the trends, right? The good runs, as in the runs that would be kind of, I guess, right, beneficial to us would be that. In terms of, again, I stated the conditions in terms of how we're implementing this or using this philosophy for a certain set of investor, right? Someone that's just interested in buying when there is demand and selling when the supply, the market conditions show that there's a lot of supply, right? That's who this is tailored to. Just bear with me. So I'm just in the process of, so we're looking at these, right? So I set out A very specific and concise set of conditions in terms of who this would appeal to. Yeah. It's for the person holding a crypto portfolio that's literally just interested in getting in, earning their 10%, 15%, and whatever else, and getting out before this goes south again, right? This is how you would use this principle. And as I said, just to recap, because we just had someone join the stream, I'm just going to go back a little bit just to so you're not looking at a bunch of lines and dots and thinking, hey, yeah, you said that this wouldn't be the case for us. We wouldn't be looking at lines and charts and things of that nature, right? So looking at this from that perspective, knowing that each and every single one of these trends started sorry, I'm a bit distracted. My phone's pinging. I'm just putting it on airplane mode. So this trend here started from a crossover, right? You root back all of these big movements, each of them start at a point of a cross. We can go back now visually, just a visual check, right? I don't have to draw out because you know the principles in terms of what we've discussed up here, but just review it. Just give it an eye test, right? Give it an eye test. Yeah. And that's the point. Those are the points that we're trying to get in. So now I want to switch back and show you another piece because again, I'm looking at the time. We've got about 15 minutes, 18 minutes or so for me to touch on something else now, right? Just to, again, complement this style, right? But I want to just, again, leave it there in terms of the crypto bros. These are the set of rules and circumstances where this would apply to you, right? To that investor that is only interested in the long signals, right? And now you're going to say to me, but, you know, or say to the channel, hey, I've seen what Thetafin has to say about all of these other concepts in terms of supply, demand, trend lines, and all of this kind of thing, and areas of resistance. Yes, I agree, you know, fundamental analysis, not crossing over technical and all of these things. But what about all of the false positives? What about the crosses where there isn't, you know, they don't lead to trends, right? What about the long signals that don't go anywhere, that are preceded immediately with a short signal that doesn't go anywhere, right? What about getting caught in the traps where the market is consolidating? And I know that I said that I wouldn't be using technical jargon and things like that within this live stream, but I have to, because these are the questions that, you know, this would this kind of I guess system or showcase and something like this, naturally I would expect you to ask those questions, right? And now that would lead us nicely to the next step. But I want to just quickly show you. It's not now. This is where we kind of just quickly apply. I just want to show these same principles applying to something a bit different, something that we can trade. So I'm just going to put it onto the just a Euro USD. Again, just so I can just quickly showcase, it's the same principles applying. So with anyone that's trading Forex, again, it's the same principles because you're looking for the same initial indication, right? In terms of the probability. What is the probability? If you're looking at this algorithmically, right, and you're able to identify these crosses, right? You're able to identify these crosses here, right? In terms of for signals for going long. Again, crosses in this nature for signals for going short, crosses for this nature for signals going long, crosses for going short, and so on and so forth, right? Again, because this is now a Euro USD, meaning that most people that this would now appeal to are interested in both directions. Yeah. You're interested and you can make profit in both directions, because now, akin to this investor, or this system, or the person that's trading and investing and trying to make a passive, well, not so much passive, but trying to make an additional income in this manner, you can now trade in both directions, which is the beauty of it, right? So again, the same principles apply, and now the same questions would apply, because I know that with regards to forex, it lines up a bit better because it's a very volatile pair. So you get a lot more clarity in terms of, look at that, it just, the runs are just beautiful, right? And then in terms of the drawdown, or the range in markets where it's choppy, you get a bit less of that than crypto, again, because this is more established. And you can, we can go back and back and back and see this over time, but I don't want to take up too much time. I just wanted to just quickly touch on that. And again, the same principle applies for something like an Apple stock. um, Stock Apple, right? We can still identify, and something that I showed earlier, right? So we can still identify the same principles and use the same system or the same initial indication to flag up the same kind of drops in terms of the movement and the initiation of these nice bullish spikes. So if we are looking to get into an Apple stock, so in terms of July, Friday, the 22nd of July would have been a good time to buy Apple, because it would have gone up by roughly $30 in terms of the stock price, right? So again, this is where we'd use it. But then if you'd been paid at the end of August, you'd see a drop, right? So this is just again, this is how we use it in terms of knowing the right points in which to get in with certain stock and swap your portfolios around. And again, just laying the building blocks in terms of how to use these key concepts one by one, right? So now to go back to just a question that I wanted to answer in terms of the market conditions of the BTC USD, and showing you what would then happen with this kind of like choppy market condition and this choppy area in the markets, right? So now this is where, again, I want to just get rid of this, but let me close it down so you've got a fuller view. And I'm kind of, I'll probably touch on this in terms of this evening stream, in terms of what I'm about to show you next. Yeah, I'll do that actually. Yeah, I'll touch on it in a different stream in more detail, in terms of this set of indicators for trading view. So just bear with me. So I'm gonna put this to green. Yeah. Okay. Boom. And that should be on. All right. So what I want to show you here is a volume indicator, right? Purpose being, again, just to touch on the question that would have arisen that we talked about in terms of the false positive. It's all good and well showing us a simple moving average, Thetafin. You're not showing us anything fancy, and yes, you've explained the news and other fundamental bits of analysis do impact the movement in price, so we cannot rely solely on points of resistance, points of interest, supply and demands, and grab zones, and all of this kind of candle patterns and all of this kind of thing, because they're all very speculative. So are you not being speculative in terms of indicator that you're showing us on the moving average crosses? Because there are several locations where there are crosses, but there's not enough in terms of making it a trend. And I would have said, yes, great question. And here is the answer to that, right? In order for market to trend, you need volume and lots of it, right? In order for market, I'll repeat that. In order for market to trend, you need volume and a lot of it. And this is essentially what this is showing us, right? So this is just an indicator again of in terms of, like I said, an algorithmic approach. And I laid it out, a few minutes ago. We don't need to get trigger happy. Just because we've seen a cross, it doesn't mean that we move. We need to look at the next step in terms of our algorithm, in terms of confirmation, right? So you can set this system up with a few confirmations, and I'll show you those, like different pairings and different ways to kind of set up and build this system up, right? But I'm skipping out some things because yes, you would need a second confirmation, right? You need something to kind of like balance out your thinking. Now here, I'm showing you something that, again, I'm going to explain it briefly because there are different ways to kind of assess volume, but this is essentially a volume indicator, right? It shows us the amount of orders or trades or, in the orders placed within a certain direction. So in terms of orders buying a certain asset or selling a certain asset. And it works slightly different in terms of stock, shares, Forex. So I can't put the same indicator again. This is why I don't want to use it in TradingView or use something similar in TradingView because it simply can't, it's not a one size fits all. Different indicators and different assets measure, their volume is measured differently depending on, this is information that people like your brokers would use in order to check where certain things are. And again, we want to be going with the flow, not going against the flow, which is why this is so key. This is such a key piece to identifying and getting into trends. Let me not waste too much time talking about this in terms of explaining it. Let's go straight into what it is and what it does. So this is a volume oscillator. And again, you don't need to worry about the shape. I don't want to make this too complicated. All we're looking at is the levels. So there are several lines splitting up, running horizontally. I want you to focus on this first band, right? So there's 3 zones I want you to focus on. The first one, the second one, the third one, right? The first one, second one, and the third one, right? So why are these important? These are important because, in fact, let me just slightly tweak these levels, right? Just because I want to just make them balanced for the sake of showing you something. Balance them out, right? Okay, just balancing them out. So there's an 80 to 20 level, right? Which is a zone to identify and indicate, you're in a buyer's market in terms of the volume of buyers significantly outweighs the volume of people selling, which is what we'd be looking for to make the market, move with momentum in a bullish manner, in a bullish market. And the opposite would be true in terms of this bottom section, not the middle section, the bottom section, where you've got a significant amount of people selling because there is a lot of supply, right? And therefore, this would make price drop. And you're not looking at the shape, you're not looking at where the lines are, how far there is. It's just as long as it's in this zone, this is the sweet spot. And as I said, I've tested these indicators rigorously. I'm not talking about things that I haven't tested. There's about 800 different volume indicators that I've personally gone through, tried out, tested to get to this point. And yeah, again, guys, these metrics are there for us to use. And I'll quickly just no, I'll save it. I'll save it for later on in the video. It's an anecdote that I've told before, but yeah. So we've then got the zone in the middle, which is the dead zone, right? What's a dead zone? A dead zone is where you've not got enough air in your lungs, right? You've not got enough air. You've not got enough volume in the market to push it in either direction. People are kind of flippity floppity, right? They're undecided. It's an even balance. Now, I've just said 3 things to you. So in terms of if there's a lot of people buying, what should you expect price to do? Spike up, right? And if you've got a lot of people selling, what would you expect the market and price to do? It'd be dropping at a massive rate. Yeah. So if you've got an even amount of people buying and selling, the market would move sideways. It wouldn't go very far. Now, let me just open this up. Again, I said to you, I'm not leaving any stones unturned, and I won't be cherry picking favorable market conditions. I wanted to be able to showcase these things to you in a way that you can actually you can actually view these and look at the principles in play live and direct. So as I said, this is exactly the same as the BTC USD chart. Exactly the same as what was being displayed on TradingView. So let me go to the BTC USD. Crypto and BTC USD. Okay. So we obviously looked at all of these, and we looked at it's rigorous conditions here, right? So again, if I go back to my Pepperstone account, it's exactly the same market conditions, right? Exactly the same. It's just that on one I've got a set of indicators, but it's exactly the same shapes, exactly the same market conditions. So with that said, what I want you to do is just look down here, right, at the market conditions I've just laid out to you. Taking into consideration the principles I told you about where price needs to be, yeah, in accordance to volume and market volume, yeah, where price needs to be with market volume in mind, right, and where to avoid it, right, when you're in a choppy market, right? So let me just highlight this to you so that you can see it clearly. Yeah. So I want to take my highlighter tool and go back to those decisions that I asked you to make with me, right? In terms of the core principles that I showed you, in terms of price, in terms of the moving averages. I'm going to put the exact same moving average onto my chart so that there is no, so that we're all in agreement in terms of the settings and the parameters and everything that we've set it to. Yeah. So we're looking at the yellow. Let me remove any distractions from my chart, right? So that we're all on the same page here in terms of the trends that have been identified and that we've called out, right? So we saw that in this particular instance, we received a signal to go long, right? A signal to go long. However, if we look at where our volume was on that particular signal, it was nowhere, it was within our dead zone, right? So what do we do with that signal? We ignore it, right? We also got a signal here across to go long. Guess what? It wasn't in our sweet spot in terms of demand. We didn't buy it, right? Again, the same thing here with this cross and this cross. All of these crosses, you've got one here, right? Because again, as I said to you at the beginning, it's not perfect. It's helping you eliminate the noise, right? And there's no cherry picking happening. Again, there's crosses. We're looking strictly crosses in terms of the principles that I talked about. Again, here, cross, right? Closed and went above. Nothing, because it's all in the dead zone. Cross, you don't take it. It's in the dead zone. Cross, you don't take it. It's in the dead zone. It's not until this cross that happened. And guess what? it's identified and you're in a sweet spot in terms of where price needs to be. And you can now pair these two things up. So you look down at your volume indicator. Is there enough volume for this to be a trend? Yes, there is. You take it, right? In this situation, in this scenario, cross occurred, right? You're not in the market in terms of you're not in a place of volume, right? The next candle, flat, 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 flat. Not until there that it gives you the green light to take it because there's now enough volume, and then you can get into your pump and dump situation. So into your a pumping market. And again, there'll be areas where it's not a perfect entry, but though you can see in terms of the principles and the loose application of these principles that you're able to identify trends. Again, the title of this video, being able to identify market trends like a pro, right? And cut out all of these noise and false positives and basing it on trend lines and all of these kind of different things, being able to identify them now. So example, right? We've got a live and current market condition now. Here, it's not, we're nowhere near the signal in terms of where volume is to make this a trending market. I know that it hasn't closed the price candles, more than six, about 10 hours or so away from closing. So there's still room for it to develop. However, volume hasn't given us an indication that this is a goer, that this is a change of direction or a change in trend. So again, it's about having these principles in place and doing this in an algorithmic way. Means that we wait, we're able to express patience, having that discipline and that trading psychology not to make rash decisions and make investments based off of how we feel or how we've drawn something, which can be then redrawn and kind of there are so many other things distracting you and removing the constraints of numbers and averages. Because because I think the best way to say this is the moment that you remove the numbers and what you're being told to do and not do based off of these zones, these averages, these oscillators, these volume measurements, and price action, and these indicators crossing the way that they do. Because as I said to you, this is on back testing over about 2 to 3 years. And again, I will do a session on back testing this within the software. So whether it be Trading View and a strategy tester that's implemented in Trading View, or MetaTrader strategy tester, you're able to back test these strategies because again, they're numbers driven, they're indicators driven. So it makes back testing be automated in this manner because you put in the criteria in terms of what should constitute a long trade or a buy or a sell, and you let the software then back test it. You can then obviously do a manual check, but you'll find that over 2 years, 3 years, it's only taken about 100 trades, but 70 of those trades are winners. It gives you an indication of, you've got about a 70% accurate, 70% accurate system, and you can then refine the parameters. You can refine the things and build up those percentages. But if the moment that you diverge away from relying on this initial indication, checking that the confirmation agrees and that there's volume, right, is the moment that you avoid taking losses and making, again, investment decisions to, in this instance, right, thinking, oh, you know what, but it was a very big candle and I have a big feeling about it and Elon Musk is tweeting about this, so therefore I'm going to put $1,000 into Bitcoin because I've just seen a massive candle, and that I'm going to follow this signal without checking and making sure that volume agrees that there is enough volume to kind of constitute this move. You then end up in this situation where you're now having to close out or sell or hold your assets at a massive loss or drawdown for a long period of time. Whereas someone else will get in at the right time and be able to not be in drawdown and be able to ride out that trend for a larger profit. Because imagine how many times, and then even just look at the fortitude. A lot of people do end up selling things off of the fact that they've been in red or in a negative for a prolonged period of time, and then they'll come back. Oh, guys, don't follow that Thetafin strategy, or don't implement their system. It doesn't work. But the thing that's not working is the discipline isn't being applied. You're taking the numbers out of play and relying on your emotion. You're taking the discipline out of play and relying on your gambling mindset, right? And winging it. And this is the core foundation. As I said, these are core principles in terms of these assets, these movements, these principles. They're all numbers and average driven, right? And they work across several instruments, several disciplines, whether it's stocks, commodities, futures, indices, bonds, kind of whatever it is, right? Whatever it is, you're able to, look at the Dow Jones. Again, lines up nicely, but again, you need to pair this with another indicator that will do something similar. That maybe, for example, if I'll put the Aruna down on there, again, it can serve as a confirmation indicator, right? Because I know, I used to really love this indicator back in the day. Used to, it used to be a really great indicator, to be honest with you. And it still is a great indicator, don't get me wrong. And again, you can really tweak these parameters and have it fine-tuned to get you in at the point of entries. Obviously, change the colors around to suit your trading system. But again, it does a similar thing. And there's many ways to pair that with this in order to get in the confirmation, checking and consulting volume in whatever way you consult volume, and then being able to then implement that. So again, this is just a recap video in terms of the first video that I put together. I'm going to break these down. Obviously, the audio is a lot better now. It's a bit easier to follow along. I've got the trading systems working, so I can flip between the two interfaces quite easily, so that you're able to follow along and implement this into your own trading strategy without having to worry about not having the same software as me. I'm hoping that you can see these principles being applied, the same concepts in terms of price action without having to draw, taking it, back to basics without having to draw lines and things of that nature, and just making the indicators do the work. Don't be fooled by the many systems or people that are out there that would feel, because I know that I used to have one of my students that took one of my courses probably about a year ago, and he came back to me within a couple of months and said, you know what, I don't, it feels like as though I'm not really trading because I'm not drawing lines, and I don't know how to read market direction without, or I'm not able to assess what's going on with price or where price is going to go without having to draw lines and being able to do it without any indicators. And it's like, why try and work out cosine and the tangent and all of these things if a calculator is available to you and you know how to measure and get to the same result? Why are you trying to do it the hardest way that relies again on more speculation? It's not an accurate, no two people will draw the trend line in exactly the same place. Whereas an indicator that tells you an average, it's basing it directly off of price. You already know what I said about trend lines and kind of trying to assess support and resistance in that manner. But again, he later then came back to me and said, I really love the initial strategy. He asked me to show him a few different things, and we ended up going back to the bare basics of this, because yes, I can sit there and go through someone and go through it through support and resistance with them, candle pattern strategies. I've tried all sorts of things, meet the market maker, smart money concepts, ICT, all of these things. And as I said, it's not a knock to any of those guys and anyone trading in those in terms of those systems. They are profitable. People are doing well. then all it comes down to is your level of discipline, your money management, your risk management, and your trading psychology in terms of how do you get to your decision making. As long as those principles are strong and you're able to be disciplined, you can be profitable regardless of what strategy you're using. I don't think there's a holy grail in terms of strategy. I think this is just easier for me as a person because it takes my emotion out of things. I'm able to implement and rely on the numbers and have faith in the numbers. To see 3 losses in a row, I can confidently take that on the chin, knowing that if the numbers play out, I should get the next 6 or 7, right? And that would make up for the 3 losses in a row. If I lose 6 losses in a row, I may win the next 14. It's just all a numbers game. But being able to have back tested and put the numbers into practice and the combination of indicators into play, it gives me that confidence to keep at it with a system and be consistent with a system, knowing that over time you will get somewhere. But what you don't want to do is, trying to chop shop. And if you know that discipline and financial, and you're not hedging your trades properly, stop losses and trade sizing is an issue for you, knowing which pairs to do. You're listening to speculation and you're seeing that you've put a lot into Bitcoin and it's down, and then you sell it and then you get rid and you cash out. Guys, all of that is just creating ripsaw. And what you want to be able to do is be consistent and reliant upon whichever strategy that you're using and you're implementing at that time. And to be able to be profitable at the end of the day requires you to be consistent with it and sizing your positions with of logic and using the numbers around you. So this evening I will be going through probably around 7:30, 8 p.m., somewhere around there, UK time. I will be going through um, sizing sizing trades again, being able to place positions on, not just from, just doing something like this and yeah, I'm going for 2 to 1. How to actually make it a numbers driven 2 to 1, and sizing these trades appropriately based off of the numbers, and making sure that we're not oversizing our trades and that we're putting the positions on there properly, not based off of what candles in the past were doing, that we're not looking at the fundamentals in terms of what influenced them and thinking that set of fundamentals that cause price to go down to a certain level apply in today's market. I just don't believe in that. Again, not knocking it. I'm just saying in terms of using logic, it doesn't really line up in terms of my philosophy towards this and what I'm trying to get out of my trading system. I think my algorithmic approach works, and when you couple a few of these indicators, these good indicators, together, that's when you really see the magic in terms of having something consistent and reliable that you can execute each time. You can be disciplined, and yes, you may not take, you know, 30 trades a week, but being able to confidently take a couple or even 3 trades a week that you know that the probability of you being successful is higher. I think that's where, you see the beauty in a system like this, and you can implement it long term and confidently do it across different markets. And at Thetafin, that's what we're looking to guide you on. I'm looking to show you guys again how to things like stocks, giving you daily tips and guidance on stocks, shares, indices, cryptos, precious metal, foreign exchange, and amongst many, many more. I'll be, streaming as many times as I can in a week. So yeah, thank you so much. I've been Thetafin, you've been yourself, and thank you for tuning in. I will catch you in about 6 to 7 hours time, where we will go through some strategies for stocks and shares, and then probably end the week tomorrow or Friday on some forex pairing and how to size our trades properly, and hedge our investments and